Hello and welcome to Business Incorporated live on Channels Television. Well, it's the final trading day of this week, the TGIF trade. Here are the top stories right now. Leadership shake-up at Spar. The chief executive of South Africa's retail giant steps down. Finance chief moves in to the top job. And despite recent gains, gold prices are on track for a weekly loss as the US dollar climbs toward a near one-month high. Now we see Bitcoin bounces back above $65,000, but would it hold? All right, now let's get a quick check of what's playing out with other markets that we track at this point. And we're seeing oil there. We're seeing a flip there. Brent, $71.37 a barrel, down about 0.40%. We're seeing a pullback there, and it's still, geopolitical tension right there with global energy markets. And looking at both contracts, they're on track for weekly gains. Brent is on track for about 5% gain for the whole trading week. WTI also on track for about 4% gain this week. So it's renewed bullish momentum there we're seeing for the week. But not the same story with natural gas. That's still down $2.96, losing the $3 mark after that monster run earlier in January. Let's get a check on metals market now. We're seeing gold there. The focus is still geopolitics. It's fueling tensions around safe haven appeal there. The safe haven appeal is back. The spot silver back to $80 per ounce. And we see spot gold up 1.11%, $5,052. Palladium, that's up 2.09%. Copper, 0.49%. But, for the week, I believe gold is, heading for a weekly loss this week. That's talking about spot gold. All right, let's get a check on other stories now. Kenya has raised $2.25 billion in international the international bond markets, joining other African nations taking advantage of lower borrowing costs. The East African nation sold $900 million of 7-year debt at about 8.1% and $1.35 billion of 12-year notes at 8.95%, aiming to ease its repayment burden. The move highlights, strong investor demand for African sovereign bonds as markets rebound and governments refinance at more favorable rates. And to all the stories now, Burkina Faso has received $33.2 million disbursement at this time. Fresh funding to bolster the economy. That's according to the that's coming from the International Monetary Fund, releasing about $33.2 million under its extended credit facility, while rising gold output has pushed the country's current account into surplus and attracted more investment. I would see in South Africa now, the chief executive of South Africa's Spar has resigned, and that's South Africa's second largest grocery retailer, shaking up its leadership. The Spar Group Limited CEO Angelo Swartz has resigned after less than 3 years in a top job, ending a 19-year career with the company amid ongoing turnaround pressures. Stepping up from finance, the chief financial officer, Reza Isaacs, will take over as group CEO. That's March 1st, 2026, as the board looks to strengthen financial discipline and keep strategic execution on track. I will see AIM-listed energy group, that's Chariot Limited, has successfully raised about $20 million through an oversubscribed placing and subscription of new shares to help fund a major strategic move into Angola's oil sector. The funds will be used to support an acquisition of a producing offshore oil interests in cooperation with Angolan E&P company A2 Energias, giving Chariot's economic exposure to up to 4,000 barrels per day of production from blocks 14 and 14K. Assets are currently delivering roughly 8,000 barrels of oil per day. All right, now let's get a check on how the Naira has performed so far this week. Definitely, we'll see the trades. The trades are still on. The market is not closed yet, but week to date, we're seeing the Naira has gained about 0.4% so far this week, about 6 Naira. I'm looking at how the week started. this week. That's for the official window. Let's bring in Bankole Odusonya now, Chief Dealer, Polaris Bank, to bring us up to speed. Hello, Bankole. Great to have you. Happy TGIF at this point.
Good afternoon, Ladi.
So looking at the Naira performance so far, this week, we don't have the final close for today. We're up about 0.48%. We're still sub 1,400 Naira to the dollar. What do you think drove sentiment this week?
So what we've seen is a notch up compared to what happened last Friday. If we look at it week on week, last Friday, the Naira strengthened to about 1,330. We believe the central bank, of course, intervened positively by buying some USD. Of course, historically, they intervene by selling. So they are participants in the market actively selling or buying. And you can imagine if they've sold last year at 1,500, 1,400 levels, it's definitely positive. And again, if they are buying back at, just to stabilize prices, at 1,330 levels, I mean, that's just the speculated pricing. But as of today, we are at 134.45. That's because the demand crept back in. Most participants in the market, when they saw the slide we saw in the last 7 days, wanted to see a bottom out. So they simply just waited on the sidelines. And then yesterday, we saw a lot of demand in the market. So we saw an uptick of about, say, 10 to 15 Naira movement back to 45 levels. Whereas as at last Friday, it was at 1,330. The external reserve shows the positive movement. If you track it from December 31st, we were at $35.5 billion. As we speak, so on 17th of February, we're now at 38.5. That is a gain in less than 2 months of about $3 billion. If you were to do an arithmetic progression of where the external reserve would get to by June or say September, you'd then be looking at an addition of say another $7 billion. But it's a space to watch because FPIs, they usually come in at the same time and sometimes simply just review their profit being made on equities and securities like treasury bills. On the other hand, for those who came in since last year, there's a positive spread on the FX they sold. I mean, if they were to buy back now, they will be buying back profitably also. So there's enough incentive for some to stay with very high interest rates and a booming capital equities market. But on the other hand, profit could be taken on securities, equities, and even in covering their FX positions. So those are the variables that must be monitored.
Okay, yeah, a lot to monitor, at this point, and seeing the gain so far this week, about 6 Naira 43. Started the week off at about 1,347 Naira to the dollar. Yesterday's close 1,341 Naira. So I guess it's still quite bullish, looking at it this week, and next week I will see the MPC. They're meeting. Next week is rate setting season. And we're going to get a decision next week from the MPC. What are you expecting, and how do you think it translates into the bullish sentiment we're seeing in the FX market?
The market expects some level of cut. We do not know whether it's going to be a steep or a sharp cut, or it's just going to be a marginal one like we saw last year. We're currently at 27% for MPR. At the last Monetary Policy Committee meeting, what happened was that the overnight rates and the placement rates with central bank were just adjusted. We didn't see a shift on the policy rates. This time around, market expects some shift on the policy rates because we've seen adjustment on open market operation treasury bills rate. There's bullish trend dragging down discount rates for 1 year Nigerian treasury bills. They were trading at 16% level, but the last auction on Wednesday stopped at 15.9. Everything points at a downward review. But the central bank governor, he had given a forward guidance at an event last week that they will still be cautious because of inflation, because a lot of money is still being spent in a pre-election year, a lot of borrowing is still being done. So therefore, their eye is still on demand side inflation. So therefore, what it means is that, yes, most other sub-Saharan countries in Africa are cutting rates. For Nigeria, they want to be very careful. For us over here, it's a peculiar year. And even if there's going to be a cut, probably another 50 basis point or 100 basis point cut. But if you look at OMO rates, effective yield, they're at 19%, just like the Nigerian Treasury bills 1 year is also at 19%. So I'm not sure if we're going to have anything sharp or steep in cut to take us to 20%, probably another 50 basis point or 100 basis point. But market, has factored that in already. That's priced in already.
Right, and I'm sure, some of the borrowers here, maybe they get a little jealous when they see other African countries and their central banks cutting rates, so far. But, we'll see how this, next meeting goes. Thank you so much, Mr. Bankole Oduson, as the chief dealer at Polaris Bank. Thank you so much for coming on today.
Thank you, Ladi.
All right, let's get a quick check on what's playing out with the markets on the African continent. See the NGX still continuing in bullish territory there. Price discovery, at this point, looking at the NGX, 0.59% up at intraday for the TGIF trade, 194,213 new levels. I guess we're getting used to this at this point. Johannesburg Stock Exchange not left out, 0.58%, showing the back of gains we're seeing in the metals market. That's helping, prop up that one. EGX 30 closed 2.98% in the red yesterday, and the Nairobi Stock Exchange red again. That's the close for Thursday, 1.47% down, but still holding on to the 200-point level. Then for the Gulf region, UAE stock markets, they opened lower today with both the Abu Dhabi and Dubai index there down. And, we're seeing, sell-off sentiment there with some of the banking stocks. Banking stocks in the UAE and, tensions, geopolitical tensions there impacting these markets. Tadawul Qatari index closing the red yesterday with big drops, almost 2% for the Tadawul, and the Qatari index 1.40%. Let's look at stock futures now. There's a little change today, but there's a lot of volatility ahead of release of crucial economic data and potentially key ruling from the Supreme Court on President Donald Trump's tariffs. Are they good or not? Will how the Supreme Court rule? That's what investors are looking at. I'm looking out for today. So we see the futures tied to the Dow Jones Industrial Average losing the 50K level, 0.12% down, in the S&P futures 5 basis points. Tech-heavy Nasdaq managing to eke out a 2 basis point rise there. Then for Asia stocks, it was all red for most of the Asian stocks we tracked. The Nikkei 1.12% to close. The Kospi strongly in the green, 2.31% to close. Let's look at other parts there. The Nifty 50 also managed to close in the green, 0.46%. That's for India, 25,571 points. So that's the color right there. But let's get a check in the European markets now. Let's see if it's the same sentiment right there. Hello, Lars. How's it looking over there?
Well, Ladi, good to be with you. It is all in the green in Europe. All the indices up, the DAX in particular, and Frankfurt up 0.5% right now. And there is indeed some good news driving markets too. We don't really have that often. At least a couple of days really was kind of slow. And now today we're getting the news that there's some growth in the German industry, and the service sector is up as well, and much more than had been anticipated. That is according to the very latest survey there in the business community. As for the industrial part of the index in particular, it's seeing growth for the first time in months. Now combine that with recent news of full order books, and almost looks like Germany might be coming out of the doldrums here. Meanwhile, producer prices are down to slightly lower energy costs. Again, good news. So it is definitely a good day for markets here today.
We see Europe is massively investing into its military, these days. One major defense project, however, is about to collapse right now. What can you tell us about that?
Yes, Ladi, we're talking about the Future Combat Air System, or FCAS. That is a long-planned Franco-German fighter jet and air defense project, meaning it was supposed to be jointly developed and built by the Germans and the French, specifically by Airbus Defense with plants in Germany, and by France's Dassault Group, a major defense contractor here in Europe. The original plan was for a fighter jet that would work in seamless coordination with drones, the combat cloud technology, and associated weapons. Dassault led on the jet with Airbus Defense working on the other components. However, now the two companies have been clashing over the specifications of the jet, its development, and possible suppliers. It certainly didn't make it easy, of course, that later in development, Spain also got involved in the process. So now there were three companies out of three different countries, apparently with great difficulty, working together.
So what's going to happen to the project now? Will they just give it up?
Hopefully not. There were indeed reports that the project might need to be shelved entirely, but one of my colleagues here at Deutsche Welle actually had the chance to talk to the CEO of Airbus Defense, and he said that he firmly believes that, quote, there will be an FCAS project, but there will have to be some restructuring in certain parts of the project. He did admit that there is indeed a problem between two companies, allowing that, again, I quote, mine is one of them. So we see there's not much finger pointing here. There is much more an effort trying to figure out how the companies could be better aligned on the project. Much of the problems, of course, seem to lay with the speed of developing certain components, with both companies noting that times have changed in the defense sector. FCAS was indeed started long before recent geopolitical escalations, and it seems that the military industry hasn't fully adjusted to those new realities.
So, how important is this project for, all of Europe?
Well, Ladi, there is no doubt Europe needs to strengthen its military. We are working within a weakened NATO after the US under Trump has pulled its commitment, or not pulled it entirely, but made it clear to partners that the US cannot be relied on to intervene on Europe's behalf the same way it used to be in the past. However, strengthening the military is quite a complicated task in Europe, especially on a continent that has very different military strategies and equipment. And now with regards specifically to the FCAS project, we see that it is currently much better suited for the French military than the German forces. For example, France is a nuclear power, so they want the fighter jet to be particularly light, to be suitable for aircraft carriers and to carry nuclear weapons. But the German Bundeswehr does not have either. They do not have aircraft carriers and they do not have nuclear weapons. So it's quite difficult here to adjust these systems. But then again, with so much money on the line, and also with how important this is, European security policy, they are scrambling to make the best out of this situation.
All right, I do remember in 2025, most of those defense stocks, they really did do well. We'll see what it holds for 2026. Thank you so much, Lars, and enjoy the weekend.
And you too, Ladi. Thank you very much.
All right, now let's get a check on the crypto market. At this point, we're seeing a bounce for Bitcoin. 1.28%. Was trading at $65,000, $66,000, but managed to get a bounce to about 68,000. But we did still see some profit taking around that level, bringing it back down to about $67,000. And we see Ethereum still sub $2,000, $1,947. BNB trying to make it back up to maybe $700 per coin, 0.43% up. And, some greens for most of the top 100 cryptocurrencies on CoinMarketCap. But let's look at the weekly performance for Bitcoin and Ethereum this week. Let's see how they've performed this week. That's talking about Bitcoin and Ethereum. Not much uptick there. All right, so we see Bitcoin 0.76% so far week to date. Ethereum, on the flip side, that's down 0.64% this week. So not much to see here, looking at performance for both of them. Well, let's bring in Olumide Additional now, financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon.
Good afternoon, Olumide. So, yeah, we're still seeing that range trade this week for Bitcoin and Ethereum. But I guess if you were a shorter earlier this week, coming in from Monday up to Thursday, you definitely made some profit. That means you bet on Bitcoin, going down, and Ethereum that made profit. But today we're seeing a bounce now. Is this a bounce into the weekend, or how are you seeing it?
It looks like a dead cat bounce. Technically, in simple terms, simply means that the bounce looks like it's going to be short-lived. But you look at the beginning of this year, you could see that we are seeing exhaustion from the bulls. Recall that since October 10th, 2025, where cascade of losses in the derivatives market, a lot of traders have been unwinding their positions. And unfortunately, with events going around Iran and the United States, investors are moving back to the safe haven, and that's the US dollar. So you could see that major currencies, including Bitcoin, had to drop at some point. Looking at the price action of Bitcoin right now, over around 68,000, it tells you two-case scenario. We either wait for pumper action from Bitcoin ETFs, BlackRock, which looks unlikely with the tepid performance of US stock, particularly the heavy weights like Nvidia, Google. So most likely, it seems like 65,000 for Bitcoin is at play. But going forward, I think that the first quarter is going to be one of the worst performance for these assets since President Trump assumed office. And that pretty tells you that the narrative that we have a crypto pro president in the world's biggest economy no longer has weight on the economy. I think what really the crypto market needs now is liquidity. And as it looks like now, investors are not really interested in the crypto market right now, Ladi.
Yeah, it seems that's the consensus at this point. I hear most of the crypto traders that love to play in the casinos in the crypto market, they're moving out to prediction markets at this point. They're taking their money from most of those meme coins. They're heading to the prediction markets, betting on future events and making money there. But is it really more profitable than betting on the meme coins here?
I think, like you said, rightly said, in the world's most powerful economy, prediction markets have taken a role. You look at poly market, they're making so much money that they're opening grocery stores for low-income earners. But if you look back at Nigeria, I think what's really winning is the Nigerian stock market. You look at, I'm surprised to see a lot of crypto meme guys talking about Nigerian stock. Nigerian stocks have rallied heavily this year. Looking at 22, investors have pocket 22 trillion naira. You're seeing Dangote's wealth at an all-time high. That definitely caught the attention of the young populace. And, the Naira strengthening, breaking below the 1,005 psychology. You see dumping the black market. And Dangote and Otedola forecasting that the Naira might hit a 1,000. So the crypto market is denominated in dollars. So the incentive for the Nigeria to invest in a market that has been very parabolic, where they've lost more than half of their wealth in the meme space, is not there. So the increased attention in the Naira through the stock market and money market has also helped the Nigerian currency and has also reduced attention of Nigerians in the crypto space.
All right, so we're expecting data in the U.S. Later today. That's core PCE. The data is expected to come out at 0.3%, previous 0.2%. How do you think, the traders in the crypto market, how do you think they should trade around this data?
I think cautious. I think any positive news from the US definitely will pump the market temporarily, but I think that will be short-lived. Historically, we've seen that the weekends usually where profit taking is usually amplified. So I think for long-term traders, I think, might not matter so much. But for swing traders and scalpers, they should be very cautious.
Yeah, be very cautious. That's the message from Olumide Adesina. Thank you so much, Olumide. Definitely, we'll see how it plays out this weekend and into next week. Maybe some kind of, maybe the bounce continues. Thank you so much.
Thank you for having me. Yeah.
We see some headlines there. We see the White House has set a March 1st deadline to advance the crypto market structure bill, often referred to as the Clarity Act. Officials want an agreement in place before the end of the month so the proposal can move forward. A meeting took place at the White House with representatives from Coinbase, Ripple, A16Z, crypto trade groups, and national banking associations. The administration presented draft language and directed the discussion, and definitely stable coin rewards became the central issue right there for that meeting. And the CME Group, they've announced that they'll begin 24-hour cryptocurrency futures and options trading on May 29th, 2026, pending regulatory review. The exchange will shift its crypto derivatives to a continuous schedule. This move will align with regulated products with non-stop crypto spot markets. It will also respond to rising institutional demand for, flexible risk management tools. As a result, traders will, gain broader access across time zones. That we see Soil, developed by Oracle Group. They've launched what they describe as the first compliant real-world asset-backed yield protocol on the XRP ledger, enabling RLUSD holders to earn fixed on-chain returns for the first time. The rollout adds yield functionality to Ripple's US dollar peg stablecoin at a moment when XRPL has moved ahead of Solana in tokenized asset values. Top headlines right there in the crypto market. And that's how most of the trades for the Friday. This Friday, is looking, some are, doing well, some are trying to find direction at this point. But, keep watching the show. Next week, we'll find out what will play out with most of these markets, and you can make that investment decision. Thank you for watching Business and Corporate today. I'm Ladi Williams. Enjoy the weekend.